Good evening, David.
I thought we would have had still a positive image on the JSE had we not seen this trade war dispute between the US and China. Generally, our local market didn't respond quite badly to the elections, did it?
No, not at all. I think there was an expectations, and I think the market really was waiting for President Ramaphosa to get the full mandate, which he did, so that at least he can make sure that he implements some of the changes they want to do with regards to the state-owned entities, with regards to the corruption issue to be settled in SA. So certainly, I think that was the expectations from the market. You saw that during the Euphoria when he got into the ANC presence. So there was always that positivity, that comes with change. But as you said earlier, the external issues remains a big driver for SA markets, in particular what Mr. Trump says.
Yeah, and it does have a big weight because emerging markets, of course, would behave this way because of typical growth concerns. The less trading you have in the world, the less business activity, hence emerging markets are hit.
Certainly. I think China is a big market. We must not really underestimate the influence of China globally, and in particular in Africa. They're involved in lots of infrastructure projects. They're leading the BRICS in terms of contribution to the BRICS Bank. Certainly, I think the trade wars won't help. You've seen ArcelorMittal battling because they're still a massive consumer of raw materials on some of the African mineral products.
Yeah. So we've got a couple of results out. I want to take a look at them. Hopefully we can bring that up as far as the share prices are concerned. Let's start with Vodacom. Excellent performance overseas, but then it had this BEE project, which really hurt them in terms of costs. That brought them down. And then we see the CEO telling us that also data prices had to be cut, and that is putting a bit of a span in the works. But generally, the market liking what they saw from Vodacom today.
Massive performance, I think, in a very, very difficult time. Remember, they've been, lately in the news for the wrong reasons in terms of the Komi litigation that is going through. But I think, Shami has done very well over the last few years in terms of keeping the stead and certainly concentrating on South Africa because that's the biggest market. 110 million customers for them in Africa. 2.1% revenue growth in SA. Not expected because unexpected because of the maturity of the sector in South Africa. Yeah. But Safaricom and the rest of their international business is about 15%. So that was fantastic. I think revenue going up, in line almost with their customer base.
What do you make of the Netcare results? I mean, a healthy 6-month period, but they are warning of a very tough environment, aren't they?
I think their UK business really has dragged them down, and certainly, obviously, in SA, things haven't really gone very well for Netcare. The performance is very much pedestrian. If you look at it, most of them lack under inflation. The beds occupation increased a little bit to about 8.5, but the rest of the performance indicators were not doing well. The share price has been stuck between possibly 20 and 27 almost for the last 10 years or so. I haven't really seen it really going up. The only good thing is that they've managed to pay a little bit of dividends. Yeah. But certainly I think they're still battling, and we might not see any changes very soon, given Medclinic, Aspen, the whole sector, I think, is battling.
Yeah. And you can see the market also not liking what we saw today. 3.2% down on the day.
Yes.
And then, of course, I want to get your view on Astral Foods being hit hard. And again, if you're running a chicken business, you're going to have costs, and it looks like those food costs are really, really beginning to eat into their results here.
Poultry is one of their biggest revenue contributor, and that has been hit massively. Yeah. Volume down, selling prices down, the cost of feeds also going up. They're reporting revenue, headline earnings, all about 50% down from a comparable period last year. Yeah. So that's really tough for them. They need to be able to say, how can they manage the cost? But given also that fact that we had a little bit of drought in 2018, 2019 season, so I don't think, their feed is going to be any cheaper. So they will battle.
Yeah. Joseph, thanks very much indeed for those insights.
Thank you.
Thanks indeed for bringing us up to speed on some of those share prices. That was Joseph Busher there from JM Busher Investments.